Welcome back, ladies and gentlemen. Thank you all for taking the time to stop by and chat about GameStop here with me today as we are on the cusp of our Q3 earnings. And I'll tell you what, I am more excited than ever for GameStop's future. This earnings is going to confirm a lot of things for us. It's, further invalidation of a short thesis, which is incredible, and, just a sign of things to come in the future. So, where do we start off? Well, why not pick up where we left off, right? So in last video, I was recommending that, if you still wanted to get in on things, you can maybe buy some at-the-money weeklies and then just make sure that you're scaling those out before the earnings call, reducing your risk, and preferably holding exposure that it's risk-free, right? So, probably selling 80 to 90% of what you loaded up with, and that's going to get you profitable, as well as exposure to the call, which has some potential upside, which I really like. So, I can't recommend just taking full exposure into the call through IV Crush. That can be pretty brutal. We wanted to size in some time ago, right? So let's jump right into our Discord. As not only did I give that play ahead of time, right? Like in the last video, I was talking about how I wanted to do that, right? I'll be adding some weeklies at open this morning. So not only in yesterday's video, but now again in the morning in the Discord, and then giving a play line. If you're not in this yet, but you're still bullish, grab some weeklies and then scale out, leave runners at zero risk, right? That's what we're kind of doing here today. Warrants are also fun. They can be sold Wednesday morning while we're still sky high, pre-IV Crush, right? Now, I'm not saying sell them all, but you could scalp around your core position, right? And then you could wait, maybe like 5 days until IV crushes, because it definitely will by 30%, on average. So wait a little bit. If you're bullish on GameStop, it's not going anywhere. It's going to, remain bullish into the future as we wait for a really good opportunity to load up for our next earnings play as well, right? And then, of course, you can just dollar cost average some shares, right? So, risk high to low here, right? With the calls high, the shares being the lowest. And then I added some 23s at $1, right? Easy peasy. And then, updating that throughout the day as we go, helping some other people load in, trying to time a low for them, right? Just bragging a little bit. We have some fun here. So the community's starting to grow, which is nice. Trying to help people out as much as I can. These were up 40% at one point in the day. Now, those are the weeklies that we bought this morning that we were talking about just now. So really good gains on those if you wanted to scale out. Already up 30%, 40% as a high on the day, and I would expect a little bit of additional juice tomorrow. But make sure that you're reducing your risk, taking the lion's shares out before the earnings call, because we can't guarantee anything in life. We can only, take what we have given to us in real time, right? So, a couple things I'm a little bit worried about here. I do remain bullish overall, but the 4-hour PMO is looking a little scary. The 1 day did officially cross, which is good, but we want to see this 4-hour wrap back on itself, right? If not, that looks kind of scary, and this could be a false set and reject back if it does not. Given that we have earnings tomorrow, and I have a bullish bias on it, I'm not really super worried about this. And if anything, this signifies to me a really good opportunity to load up on a bit of a momentum reset, which is exactly what we did today with those weeklies. Aside from that, we can see how GameStop is trending in comparison to the market. Looks like we're basically at equilibrium with it, right where we should be. As far as I'm concerned, the RSI is back up at that 70 zone where things get to be a little bit spicy. This is, of course, on the 4-hour. We could switch to the 1 day where there is still quite a bit of room until that 70. The ceiling has not been reached yet, in my opinion. We could potentially gap up post earnings. Again, can't guarantee it, but things look pretty decent as far as I'm concerned. Now let's get back to our charts here and take a look at our own technicals. Worried about a bearish reversal the other day, right? So I'm saying, you got to make sure that these EMAs don't cross, and if they do, you make sure that you don't lose your key level, which is the 200. Now, we did have a brief liquidity grab, which would have been the best time to load up as far as I'm concerned, and then reclaiming it immediately in the afternoon. And then today, we had a wicked run, fell back to the trend, right? That 200 is still holding on the 15-minute, and this bearish breaker block has now been converted into the order block, which is holding, right? And we also have another order block here supporting us on the 15-minute. So technically speaking, couldn't be better, right? Where do we go from here, though? Well, I have more tempered expectations than most, but we have our our 1 day 200, which is a hard rejection point of past, right? So we're definitely going to need to cover that as our first level. And then we're looking to take out these previous highs, right? Where we're rejecting. And again, that's that hard rejection point previous. So, that's going to probably be our second zone, 24.5-ish. And then we have a market structure shift to invalidate at 25.29, right? So a lot of room to the upside as we finally come into our bearish order block at $28, right? So, that's kind of where I'm going to begin with. And if we can clear that order block, convert it to a breaker block, this becomes a much larger structure, one that we've played many times, and one that I know you'll have a lot of fun with. As you can see, when we invalidate that order block, what happens, right? We get a very nice run here, and that was, I guess, from the 4 hours I could show you. It's the same trade style, though, where this was a massive bearish order block that had a retracement into it, broke, retested, and now we're expanding from, as will that same pattern play out with this order block. Giant order block, retracement. Now we're going to come into it, hopefully invalidate, retest, and then we're going. But again, things get a little bit spicy up here at the $30 mark where, we have the bond holders re-hedging, most certainly so. Whether or not they de-hedge is going to be up to them, and we're going to have to just take it in real time. So things are so freaking spicy that I'm pretty excited. Of course, we are exposed to the trade at zero risk. We've already scaled out, locked our profits, which is fantastic. All of this has been telegraphed in the Discord for you guys and in the YouTube videos here. So if you're not in the Discord, join up, and then I can answer questions for you all in real time, you name it. And something I've been doing not only this quarter, but for years now in my Discord. So finally opening it up to the public, mostly because, I'm just sick of seeing all the complaints on Superstonk, the negative option sentiment. When, I can roll these all week like this, it's no problem, and I'd be, delighted to help teach you all as well. So aside from this, Regional Formal has their earnings estimates out after us. We did ours yesterday, of course, and we can go through this as well. They actually came to the same conclusion as we did, which is quite interesting, very, very close. And that's two different sources. I doubt this individual is listening to me, and I'm incredibly skeptical of them, and I also had my workout first. So yeah, diluted 26, basic 32. Let's pop over here. And again, we shared this yesterday of 32 basic and diluted 26 for our estimate. Now, on that note, I think that we're both being too conservative. Nobody wants to, yell out the moonshot and, just be wrong. We want to be realistic while relatively conservative, even on our bull projection. Now, why is that? Right? And why are the earnings so exciting to me here? Let's get through a few things here. If you're interested, this is available in the Discord as well. So the row here, net income. And then we're tracking, again, pre-power packs when the PSA is announced, and then the PSA develops, still all pre-power packs. Then we have our holiday quarter. Then power packs, paper power packs come out, right? And then the Switch 2 launches, and the power packs beta finally starts, right? So that's kind of our timeline here is, baseline, PSA grading, ramping up a nice holiday season. Then we've got our paper or physical power packs, and then the Switch 2 as well as the digital power packs coming out, right? So with that in mind, look at our net income, negative 32 million. Sure, we were a failing company, great. Then all of a sudden we're at 15 million. That's pretty cool. Then we're consistent at that with 17.4, holiday season, 131, as to be expected. The majority of retail businesses operate in the red for 3 quarters, and then quarter four, Black Friday sales, all the holiday shopping drives them into profitability for the year. And that's exactly what we see with GameStop. It's no different. And then moving on, as we continue to build out that PSA partnership, 44.8. So that is kind of a bit of an outlier, right? And then all of a sudden, last quarter comes in 168, which is not even on the scale of things that we were expecting, totally blowing out our 131 holiday quarter, which is the best quarter. And now we've done that and some on what is typically our slow quarter. Oh my me. Now, if this is something that we can continue to compound into the future, they're absolutely cooked. I would not want to be short on GameStop given this. And that advantage that they have now over the majority of other retail companies that are operating in the red until, that Hail Mary quarter comes along for Christmas. Because now GameStop is having Christmas earnings every single quarter. And what happens when we do have, those holiday earnings, next earnings, which, will be the Q4 for us, we're going to be like $250 million, which is going to be, I'm sure, a first for GameStop and going to blow the lid off this whole thing as far as I'm concerned. Now, we can see this through the SG&A becoming more lean, right? Because our total sales remains relatively flat, right? But what we're doing is we're reducing the overhead, right? And now this is most notable here, how much it's costing us to make a dollar, right? And you can see that being reduced as a wide margin, which is really good. Moving on, I wanted to talk about, where are we cutting that fat? And if we go to the right of use assets, the operating leases, the right of use to store, current operating lease liabilities, and non-current lease operating liabilities. So the current ones will be the ones expiring within 12 months that will need to be renewed, but most likely will not be. And then the non-current will be the ones renewing later than 12 months, right? So further down the road. And then let's take a look at these numbers, right? We'll look at the sum, the total of them. Then we don't have to go through each column. And then we're starting at 563, 510, 443, 393, 281, 257. So you can see a clear path of reduction here, which is, our overhead costs, a big portion of it being reduced, right? As we close some storefronts while still being able to maintain, our total net sales, which is really good. So, moving forward, look at our EBITDA, minus 33, minus 14, minus 24, holiday season 85 as expected, that one quarter that saves you, right? Then minus 5, but now all of a sudden we've got the 71 outlier, right? So all eyes on this quarter to see if we can kind of keep pace with last quarter. If we can, oh my, because we know next quarter, the holiday quarter, is going to be even better. So, if we can do well here, I am super bullish on GameStop, probably for the next 6 months. And obviously, as all that compounds, we have the opportunity to have more things fall into our lap, which at this point is clear to me that it is outweighing any potential risks. The number of potential good things that can happen to us are really starting to add up, and the number of bad things or what could go wrong is really being reduced quarter by quarter, which through this is giving us a lot of confidence. It's one thing when you hear it and all that, but when you can actually see visually, and I'm such a visual learner, the reduction of costs while maintaining your revenue, just increasing your margin as well. So a lot of positivity here. Again, not something that I have typically tracked a lot of. I have history as a day trader. I'll be honest. I am an options swing trader, basically, as you see here, right? With great success while I, basically swing trade GameStop as well. You say you day trade GameStop, you're a liar. There's not enough liquidity to do it. We only have 100 million volume days once every 3 years. So, what else are you doing in the meantime? For us, it's the option swings, right? But thanks to GameStop, we're invested, right? So we're taking the time to learn a lot of this stuff. So still relatively unfamiliar with some of it, but you have to start somewhere, and this is a good baseline for us to build our knowledge base off of, collect some data to help understand that all on our own, right, without relying on others. Just some serious nice things, right? The EPS check is decent. Like the improvement here is crazy. Like we're blowing out, our holiday season on our slow season. So if we can do that again, which is typically Q3, another slower season here, just it's over as far as I'm concerned. So we're definitely going to beat revenue. We're going to beat earnings, which is good. But the thing about the earnings report is you want a triple beat, right? All of the algorithms, they want the triple beat, and we're only ever going to get the double until Ryan is willing to give forward-looking guidance. That's bullish. Well, obviously, it would have to be bullish. How could it be bearish for GameStop? At which point, I think it's not a good situation if you're on the other end of the trade, and it would truly send the stock if Ryan spoke at earnings with bullish guidance, which he is entirely entitled to do, right? That is not out of the realm of possibility, and at some point, something that he may want to do, right? So I'm on board. I'm excited for it. I don't know when it will be. Could definitely still be further down the road, but like I said, that's one of the possibilities stacking up that's bullish of nature, right? In comparison to the potential bearish possibilities that we can really see coming forward. So, of course, we have our own bias, and you can feel free to correct me in the comments below. And if I have anything wrong here, please don't hesitate as well. So, moving aside from the earnings projection, we have our IV, not really up. The interest rate decision is on Wednesday. They're pricing in at 90% a rate cut, which was previously not expected to come this December. Jay Powell said, the market's too strong. We don't need to cut rates. And the market just immediately retraced as soon as he said that. Then, we kind of get the data that the rate cut will happen, and then the market's been ripping up. Today, a retracement as people kind of load up on that, as far as I'm concerned, which bodes really well for GameStop's earnings, which will be the day before, into what could be an extended post-earnings run. Now, does that mean you don't scale out? Absolutely not. IV could still crush. However, it is, and nothing's a given, a sure thing. And that's why you reduce your risk while still trying to hold some exposure. Lunar packs were sold out. They're restocked. New chase cards. That's fantastic. I like that they are running out of inventory because everything that GameStop spends cash on is potentially a liability, even its inventory. Considering that Pokemon cards are selling at an all-time high, this bubble could pop at any time, at which point their inventory is converting at a negative, right, ROI. So, you're paying $1, and now you can only sell it for 70 cents or potentially less. This is a volatile market. The card prices swing drastically. So, it shows to me that they're not overcommitting on that inventory, which is awesome because, this could fall back on us at any point, which, A, I don't want to happen because of how successful it's making GameStop. But B, it just goes to show why we need to, even though having found success, continue along that path, looking for additional revenue streams that align with our core business here, so that if something does, pull back on us a little bit, we're going to be okay. It's not going to cripple our business model, right? Aside from that, the utilization's up, people selling cash secured puts, people selling cover calls, just below where you think it will go on earnings, obviously. Farm the IV as it's there. It's going to crush, even though it's not that high. It still is going to be lower at the end of the week and maybe even to start next week, right? So, yeah, that's kind of what I have for you guys today. Really excited for GameStop earnings tomorrow. We're going to be streaming throughout the whole day on YouTube here, so don't miss out on that. We're going to be updating our spreadsheet as earnings comes out and obviously interpreting price action in real time and giving any advice and keeping everyone company as needed. So, again, jump in the Discord. You're literally losing money by not being there, right? And this isn't my first earnings player. I've been doing this in my personal Discord for 5 to 6 years, as long as I've been in GameStop, a really long time, right? And so happy to share all of this with you. As we try to become a YouTuber here, right? Already producing Magic the Gathering arena content for probably 7 years here on YouTube. A long time we've been a creator, so looking forward to diversify that content here for you. I hope you enjoy. Leave a like, drop a comment, subscribe to the channel, and I will see you all tomorrow for earnings.